The offshore domiciled fund within our global flexible strategy had a pretty pedestrian quarter. Fund return was -1% in US dollars over the 3 months, which is slightly weaker than the average fund within the peer group tracked by Morningstar. However, over the 12 months to September, our 16% dollar return puts us a little shy of 4% ahead of the peers, and longer term performance remains robust, comfortably putting the fund in the sort of top 10% of its peer group, both domestically and offshore. The quarter was a pretty volatile one for global equities. The MSCI All Country World Index lost 4% in September, ending the quarter down just shy of 1%. Emerging markets and US small caps were particularly weak, while Japanese equities bucked that trend, and sector divergence was quite noted, with financials, energy and technology stocks sort of to the forefront, while materials and staples lagged. Stock selection, which has been a key feature of our outperformance over sort of the duration of the fund's track record, was a little weaker during the quarter. Exposure to Chinese technology stocks undermined performance, albeit modestly. Although our decision to remain overweight equities relative to bonds and cash proved to be the correct one, as equities once again outperformed those asset classes. Our approach within the fund has been to continue to diversify. We've reduced concentration risk within the fund, lowering exposures to the top 10 holdings, fattening the belly of the portfolio and lengthening the tail. And within the fixed income component of the fund, which has remained meaningfully underweight, our skepticism around valuation in that asset class remains. Our approach has continued to be relatively opportunistic. So whereas in the previous quarter we reduced exposure to short duration credit and lengthened duration via US Treasuries, we once again sort of reversed that position, diversifying the fixed income holdings themselves sort of towards a broader global aggregate bond benchmark.